Good afternoon, everyone. This is Hunter Mozingo bringing you your daily market insight video for Monday, June 21st. Just a few minutes after market close here in Jacksonville, Florida, approximately 4:08 p.m. Eastern here. And in today's video, we're going to run through a handful of examples that can highlight when and how you can utilize some crucial moving averages, especially for leading stocks, as a part of your trading strategy. And the majority of those examples are stocks we actually own in Grotection currently. So we'll be getting to that in just a moment. First, allow me to go over what just happened today. You can see it's a broad rally. All the major indices were green, and we saw some major indices reclaim important moving averages. We're going to look at those charts and those moving averages here in just a few moments. You can see the S&P was up close to 1.5%, 1.4, Q's up 0.6, the Dow up 1.7, mid caps up 2.3, and the Russell up 2.2. We saw a really nice rally in oils and banks and even some of the materials and industrial stocks that got hit pretty hard last week, which explains the strength in the Dow, the mid caps, and the Russell today. The market state remains in a consolidation. However, we saw some extremely constructive action today on a couple of indices in particular, mainly the S&P and the Russell 2000 in regards to getting back over some key moving averages. And you can see on the trend gauge here on the right-hand side of your screen, on Don's last video, there was a little yellow arrow here pointing towards bearish. That has been adjusted to a little green arrow pointing towards bullish as we got a nice strong reclaim from the S&P and from the Russell, and additionally some strong action from Dow, mid caps, and the Qs continue to be the leader at the current time. Market leaders remains bullish. We're still seeing some really constructive action in those market leaders. Long term, we are still above the 200-day moving average on all major indices. Before I get to the charts, let me point out the team here at Revere. As I always say, this is me here in the middle, Hunter Mozingo. If you have any questions, comments on any stocks or anything I cover in the video, please send me an email. My email is hunter@revereasset.com. If you're interested in our strategy, what it is Revere does from an investment approach, you can always email me. You can email Don@revereasset.com, Dan or Tim or Alex, if you have any questions for them as well. So let's get straight into the charts here, folks. We're going to take a look at the S&P first. And I mentioned it reclaimed some important moving averages, and you can see right here exactly what I'm talking about. So a nasty break of the 50 on Friday. It was quad witching, which is just usually a very volatile options expiration day if you've never heard that term before. And we got a little bit of a flush at the close, or some weakness in the last 5 to 10 minutes of the market being open on Friday. But today, the S&P was up probably about 0.5% pre-market and continued the strength throughout the day. A nice strong reclaim of the 50-day moving average, and also got back above the 21 EMA by about 0.1%, as you can see there. The other index that had some really nice action today, IWM, looks pretty similar. As you can see, a pretty harsh break of the 50 like we talked about with the S&P just a second ago. But today, a strong reclaim and actually got slightly above the 21 EMA, or more or less right on it. The Dow, not looking as great, but you do like to see that we did not continue lower. We did not break the 100-day moving average, which is this pink line on your screen you can see here. Up 1.7%, still about 1% or exactly 1% below the 21 and the 50. Looking to see some nice action to get back above these moving averages that are now converging above the Dow there. And mid caps, also similar looking to the Dow. They actually broke the 100-day on Friday, reclaimed it nicely today, however. And lastly, the Qs, by and large, the leader here. You can see they never broke the 21, just trending higher here as they're just kind of been going sideways the last couple of days right here at all-time highs. So the Qs continue to be the leader of the market for the time being. You can see the hookup in relative strength here over the last 2 weeks or so, and even all the way back to this date here. But this has been a nice little rally for the Qs. And I want to point out one thing in particular. We are looking to get multiple closes or a close tomorrow above the 21 and the 50 on the S&P and on IWM as well. So looking for some continuation or at least some strength to hold up here at these moving averages. Additionally, the dollar was slightly down today, which maybe was boosting some of these industrials, banks, oil and gas, those types of names. But we also had the 10-year yield down today. Excuse me, up today while TLT was down. But that didn't seem to affect a lot of the growth stocks. So I've said it before, a move in bond prices, bond yields, the dollar, it doesn't always explain what happens in the market. Sometimes the market has a mind of its own, or actually all the time it really does. But just wanted to point out those. I know I've covered them in most of my videos in the last few weeks, but let's get to the heart of the video here and talk about how you can utilize some of these crucial moving averages in your trading strategy. And I'm going to start by talking about the 8-day exponential moving average. So allow me to change this here from the 100-day moving average, simple, as you can see there, to the 8-day exponential moving average. Okay, and the first name I want to pull up here is CrowdStrike, which is one of our biggest holdings in Grotection. And so the 8-day exponential is going to be this little pink line you see here. Okay, so it's currently right at around 234. And early this morning, there was actually some heavy volume coming into CrowdStrike. CrowdStrike was down almost 5% or a little over 5% within the first 15 or 20 minutes of trading. But as the day progressed, they ultimately came back and reclaimed this 8-day exponential moving average. And I know Don has talked about this often. You can use that 8-day exponential as a way to get an entry in a leading stock that might be a little bit extended. And what you're looking for in that scenario is either the stock to come down and test it and bounce off of it really nicely, or what oftentimes happens is you get a slight undercut like you did here with CrowdStrike today, and ultimately a reclaim. So say you didn't own CrowdStrike, you're watching it. This is a way that you can start to build a position in a leading stock that might be a little bit extended from the 21 EMA, excuse me. You can see it was almost 10% above the 21 on Friday. If you would have bought at 231 today or near the lows, right when it reclaimed the 8-day exponential, that'd be right around 234, 235. You would have bought about 5% off of the 21 EMA. But just a concept here, and we're going to look at a few charts that look very similar as we go through these. And actually all of these next two are some of the core holdings in Grotection. So the next one is NVIDIA here. And you can see it almost looks identical as far as today's action to CrowdStrike. It came down, undercut the 8-day exponential moving average, and ultimately got back above it. And once again, this is a concept for leading stocks that are a little bit extended. If you see a undercut and reclaim, or a test and a strong bounce, those can be good areas to start building yourself a position. You get the same action in NVIDIA today, undercut it by about 1.5% or so, and then gets back above it and closes at the top of the range, just like CrowdStrike did. And this one maybe looks the best because NET, which is another position in Grotection, never broke it, came down almost right to it, and got right back up, got back above that 100 level, into the day down just a small amount, but closed at the top of the range as well. So that's an example, or 3 examples of the top stocks we own. And had we not owned these stocks, this might have been an area where we would have been looking to start a position or build a position, depending on how extended they are, and obviously depending on the trend and the strength of the market. So I want to show you a different scenario here, and we're going to use the 100-day moving average on a couple of these names here, the simple 100-day moving average. And I'm going to start here with Roku, as I initiated a position on this stock in my beta test portfolio today. So this scenario is a little bit different in that you're looking for former resistance to flip to support and to see strength off of that level. So you can see Roku ran right up into the 100-day moving average here on the 14th, had a brutal reversal and shakeout the 2 following days, and subsequently has had 3 really strong days in a row, 2 of which were on above average volume, the last 2 here. And it pushed through the previous high from 614 on Friday and got back above the 100-day moving average. And early this morning, while a lot of growth stocks were down 2, 3, 4%, Roku only came down about 1% and bounced right off of this 100-day average right here, right off this 365-ish area, and ended up having a up 4% on above average volume day. And you have to pay attention to moves like that where former resistance is now acting as support, and that's the exact action you want to see. Another name that looks relatively similar, it didn't have a strong up day, but in phase got back above their 100-day moving average. And this is another stock I own in my beta test portfolio. I've owned it for about maybe a week or so. I bought it on this breakout here on the 10th. Didn't quite make it all the way to the 100-day, and it actually almost went green a couple of times today. But in phase was down 3 or 4%, ended up finishing the day down 1.5%, and acting like you want a leading stock to act. And this stock in particular has been acting like the leading stock in the solar space. And one more, which doesn't actually bounce off of the 100-day today, but it did bounce off of a previous level that was resistance right here. So this is Square. Ran up into the 50 / the 100. They're almost on top of each other right here, and ultimately came back down, retested the 21 and bounced, and then had a really strong day on the 17th to get up through those moving averages. Today was down 2 or 3% this morning, but it bounced off the 50-day and was able to close slightly above the 100-day. So just 3 real life examples, all 3 of these relating to the 100-day I own in the beta test portfolio. All the ones I covered relating to the 8-day Don owns in Grotection. But this is just a solid example, and there's really more than this you could go through today, where previous resistance is now functioning as support. And in a strong market, which we're seeing some of that today, the Qs in particular are very strong. That's the kind of action you want to see. So that wraps that component up on moving averages. I'm going to run through a couple of things we did today in Grotection, and then a couple of strong sectors and one weak area that I want to highlight as well. So first, we initiated a position on FANG today. As you can see, this actually held up very well, especially relative to the ETF. So XOP is the ETF, and it actually broke the 21 on this pullback on the 17th and 18th, while FANG maintained it. Don initiated a position this morning around the 89 level, and we got some really nice follow through and also some strong volume at the end of the day here on FANG as it makes new 52-week highs here. We also added to our SSO position, which is our leverage position on the S&P 500 on the reclaim of the 21-day exponential moving average and the reclaim of the 50. I know I've already covered this chart, but just to show it again, this is a really strong move from the S&P. And exactly what you would want to see if you're a bullish investor right now, excuse me, moving forward. One area that had a really tough day today, cryptocurrency, MicroStrategy down 10%, GBTC down 7%, Ethereum down 9%. So an announcement came out this morning that China was further cracking down on cryptocurrency mining, and you get a pretty poor reaction out of cryptocurrency today, and the crypto related stocks, really not much support in sight for them, with the exception of some of their previous lows, but just not the most constructive looking chart here for cryptocurrency. And then lastly, 2 sectors that were really strong today after a really, really poor week last week. You got a really nice bounce from KRE today. And I mean, these were 2 brutal days here. I mean, those are very abnormal candles for a bank ETF, very volatile. And then you see a nice reaction today, but still below the 100, the 50, and the 21. I don't have the 8-day up, but I'm going to assume they're probably below that as well. And just a tough day. I mean, a tough couple of days last week for banks, making a little bit of a comeback today. And also industrials had a similar look to it last week, just sold off pretty hard towards the end of the week. And this is XLI, the industrial ETF, having a nice bounce today. So a couple of the really beaten up value sectors from last week making some bounces. I covered oil and FANG in particular, Matador, Callon Petroleum, Exxon. You can throw a dart at an oil and gas company. Most of those had strong days today as well. So that's going to wrap the video up for today, everybody. Thank you as always for listening. I hope you enjoyed it, and I will see you on Thursday's video as well as the podcast this weekend. So I hope everyone has a great week. Thanks.